Go.
Streaming from South Africa to the world. This is the Stonks Go Moon podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon podcast. My guest today, Daniel Duffy, fund accountant. Let's say for a large institutional bank, but let's not name names. Welcome to the pod.
Hi, Rocco. Yeah, so anything that I say in this podcast is my opinion, and I'd also like to stress that it is my opinion that everything according to Descartes is subject to doubt, and we have to always follow that rule, yeah?
Yeah, and I think the listeners will find out more about why you say that once we get into today's subject, which is the Eurodollar system. And everyone's heard of the dollar, but not many people have heard of the Eurodollar. So before we dive into the Eurodollar and its complexities, I think explain to us what the Eurodollar is.
Okay, so the Eurodollar, the concept of the Eurodollar was started after the Second World War, basically to rebuild Europe. So it's a way of financing Europe. So obviously the US, being the largest industrial economy, kind of provided the liquidity. So basically they sent over US collateral, US dollars, in order to provide the finance to rebuild Europe. That project kind of came to an end in 1958. But like everything else in politics and finance, once you give a little bit of power, it's very hard to take it back. So the City of London came up with this Eurodollar system, where they be able to continue the same philosophy, the same financial rules that they were using themselves. So the most important thing that you have to realize is that this is completely unregulated, because they kind of didn't, the central banks themselves didn't really understand the complexities of the system. They felt it easier just to turn a blind eye that way, that there's less accountability in the system.
Okay, so basically it's when people deposit dollars into the European banking system. Is that in layman's terms?
No, not really. It's more of a closed club. It's a big, so you have to be in the club. So even if regional banks couldn't really join this club, you have to be, because it's all based on reputation. So if I know you and I've dealt with you in the past, then I'll give you collateral. So a lot of this is due with overnight funding rates, and so it's collateral based. So what I mean by collateral based is that if I'm giving you a loan of $1 billion, I won't basically have that $1 billion. I'll have that $1 billion, right? But it's all backed on debt. It's all, so the collateral that I might offer you, so you'll say to me, right, okay, look, it's getting a bit riskier. I want a wee bit more collateral. So I'll send you over T-bills that I own, the rights to T-bills that I own, and you basically hold them as collateral. So it may only be a small proportion of the £1 billion loan. It might only be 50 million, 100 million, but I'll send you over a certain amount of collateral, and that basically covers my risk. So everything in the Eurodollar system is done on risk models. One of the easy ones to kind of understand is the VAR ratio. So if we know, say, that treasury bills stay within a range of they never go at 1-2%, then that's I only need a little bit over that to cover my collateral, cover my leverage, you know what I mean? So that gives me enough flexibility that I know that even if the loan goes bad, that I haven't lost, you know?
Right. So you basically wrote a paper on this that I'm going to put the link into the script as well, that people can go and read. But just broadly give us the guidelines, or like a snapshot of the paper that you wrote on the Eurodollar system, and like your opinion on it currently.
Okay, so the paper itself is kind of like it starts off with a history of the Eurodollar system. So I've already explained how it started after the Second War, how it was developed in 1958. But it kind of gets another life. So between 1958 and 1971, the Eurodollar system had grown that much that it was 5 times larger than the total gold reserves of the US. So before 1971, the Eurodollar system was backed $1 to $35 an ounce of gold. So it completely, the US simply didn't have the collateral to cover it. This was highlighted when the French government actually sent a warship to US, to the New York harbor, to collect its gold.
What?
Yeah. The Nixon had no choice then to take the US off the gold standard. So he basically defaulted on its debt. They defaulted on its obligations. So instead of giving them gold, they just sent them back dollars. Or dollars on a bank sheet.
Okay.
So that's basically, so after 1971, obviously they wanted to keep the system going. So today we talk about cryptocurrency, we talk about Bitcoin and digital currency and transactions in seconds and stuff like that.
Yeah.
Eurodollar system in 1971 came a de facto ledger system. It is a digital ledger system. It's backed, as I explained before, basically on collateral. It's backed on bank balance sheets, and it's backed on the perceived perception of bank balance sheets. So, and the posting of collateral. But the problem with the issue of posting on collateral, when you get environments like you did in 2008, where the system kind of collapses, where no one really knows how to value the collateral, then the banks basically hoard cash. So in the article I wrote, I have 3 particular graphs, one in 1929, one in 2008, and one I think after COVID, where it kind of shows that when the system collapses, people just hoard on to cash, hoard on to the most liquid assets. So even as in US Treasury bonds that they can replace in the repo system, cash. And because the reason why it is that you want to basically sell not what you want to sell, but you sell what you can sell in order to hold cash. So in order to cover your margin calls. So if they turn around and say to you, I got that loan of £1 billion, I post you 100 million of collateral, and they say to you, look, in order for that margin to retain, I need another 50 million. You want to have that 50 million in the bank, basically to send a deposit over, 50 million in T-bills to send a deposit over.
But what is it backed by?
It's backed by risk models on a bank balance sheet, nothing more, nothing less. And that's kind of highlights the risk in the system, is that because they're all using the same risk models, they kind of know in advance when the system's going to get riskier. So even look at Warren Buffett, 2005, 2006, he started hoarding cash because he's risk built up in the system. He knew what was going to happen in advance, and he started hoarding cash because he knew once he had enough cash reserve built up, once the system did eventually crash, then he could buy up profitable companies at pennies on the dollars, which is exactly what he's doing today. He's hoarding cash. He's more cash than he's ever owned, and he's in what I perceive in the advance of a potential risk event, where he will basically buy assets on pennies on the dollar. Even assets like gold, Bitcoin, they will probably be the first to fall. I'm not saying in the long term they're not going to back up, they're not going to recover, but you sell what you can, you don't sell. So if you think of collateralized loan obligations, private debt markets, which is exploding at the minute, if you have a collateralized loan obligation on a property market, a £1 billion property, real estate building, it's going to take you 6 months to sell it. And if the collateral's not there, what price are you going to get for it? Especially if you want to sell it quick. You literally cannot sell that asset. So you want to hold the cash so you can keep paying your bills to kick the can down the road, basically.
Okay, so how does the world's reliance on US treasuries as that collateral that we talked about, how does it create stability and potential risk in the Eurodollar system?
See, financial plummet, when you have, so Truffan's dilemma. So Truffan basically said that if you have one single global reserve currency that eventually you basically have to inflate. You have to keep printing dollars. You have to keep sending dollars into the system itself in order to maintain the liquidity on the system. So when the system collapsed in 2008, what did we need? We needed Ireland is a perfect example.
Yes.
So what you needed was the Irish government to come in and say, we'll back the Irish banks. We'll give whatever liquidity that we need. We'll pump the liquidity into the system. What that happened, that then put stress on the Irish Treasury. The market said, you can't afford this, and your risk goes up. And then that eventually led to the sovereign debt crisis in Europe in 2010 to 2014, which the Fed ultimately had to bail them out. The Fed had to become the lender of last resort. Until from 2008, the Fed has basically become lender of last resort. And we're actually getting to the stage now where US debt to GDP is over that magic number of 120%, where it erodes their ability to deal with it. So it's going to come to a stage where they're going to be like Japan, where they're basically going to have to start buying more and more of their own debt.
So in theory, what happens? Theoretically now, if that should happen, if that happens, let's go down this path. Let's we're not saying it's going to happen, but saying in theory what happens.
Well, it's happening now. So we're having this podcast on the eve of BRICS. Yeah, happening tomorrow. They're having conversations about a BRICS currency. About they see that the US hegemony is collapsing, but that's also compounded by the fact that if you think from 1971, if you had to have a fiscal deficit, which is what I believe, in order to have that fiscal deficit, you have to import more goods than you're exporting. But at the time, the US was one of the biggest and was the biggest industrial country in the world. And what did you see? You seen deindustrialization. I also highlighted in my article about a warning given by Jimmy Goldsmith in Charlie Rowe's interview in 1990, where he was having a debate with a Clinton rep and saying, like, why are you deindustrializing the manufacturing base of the US and the manufacturing base of Europe? This is going to cause social derogation. This is going to cause social problems, which is exactly what we're seeing at the minute.
Especially in the UK, right? Because I've seen some things coming out of UK politics and I'm shaking my head. I'm going like, do you guys... Let me just say the downfall of the UK government or the UK empire is going to be studied for years to come if they go down this road.
Yeah, but that's kind of the... So when people say that the US dollar is going to collapse overnight, it doesn't collapse overnight. Yeah. But what you've seen, so I discussed in the article as well about evolution of currency. So I mentioned Rome, I mentioned France. And what you've seen is you've basically seen the hegemonic power move westward. You've seen it from Greece, it moved to Rome, it moved to Spain, Italy, France, and it's moved to Britain. And so what you've seen is, like, even in relation to Mario Draghi had a report out a couple of months ago where he said only 2 of the top 50 companies in Europe, or 2 of the top 50 countries in the world, are based in Europe. That wouldn't have been the case 100 years ago. It would have been the complete opposite. Yes. And that's what it's, when you have inflation, when you think of the 1980s, when I was born in 83, so I grew up the 80s and 90s, you'd one-parent families working. Now you need 2-parent families. I currently have 3 different jobs. Yeah. Do you know what I mean? And
just to survive. 100%. The gig economy is bullshit. Sorry, but like giving people 4 or 5 jobs and they can't even afford a living wage, that's nonsense.
But if I'm working, if I'm working 3 or 4 jobs, where do I have time to innovate? If I'm washed with debt, where do I have the flexibility to take risks?
You don't even have time to think.
And if you can't take risks and you don't, so the 2 main things that we have in life is the one main thing is our time. The only thing we have that's precious is our time. Everything else we can trade or we can swap or whatever, but we can't trade time. And if you take away my time, if you take my way to innovate, well then you're robbing society of a vital good. And that's what you're seeing in Europe. You're seeing plus as well when what Japan's what with the Japanese carry trade as well. What they're saying is, if you've constant yen or constant capital moving out of Japan and moving to the US, will have room to innovate. And Japan was one of the largest countries in Europe, or it's second largest country in the world by GDP in 30 years after the Second World War. And where's it now? It's dropping slowly down the ranks because investors' money, like Adam Smith said, is not the benevolence, the budget of a poor, but each individual looking after their own self-love. And if that capital will go to where the investors think they'll make the most value. Correct. And that's simply happening.
Money finds the path of least resistance.
Yeah, and if the US don't kind of change the course, if they don't accept their own reality before it's too late, well then the circle's going to move to China. That's what's going to happen.
Okay. And question: why can't the Fed just bail out the economy again? Why can't we have a repeat of 1929 or 2008 or post-COVID?
The Fed can bail out there could simply be a Bretton Woods in the morning, and you could reprice gold, and you could say that my gold, instead of being $3,000 an ounce, is $30,000 an ounce.
Yeah. What you going to do about it?
Yeah. I'm going to buy Bitcoin at 60,000, and tomorrow it's going to be 600,000, and I'll pay off me debt that way. Yeah. There's a myriad of things that we can do.
Okay.
But the problem is that if you may well fix the system, but all you're doing, so think it's all about electricity of supply. Okay. So think of this is a band, right?
Yeah.
So I can stretch it, I can pull it, right?
Yeah.
But eventually if I pull it,
it's going to break.
Right? I can't hold on to it anymore, and it has to go back to its source.
Okay.
Or it snaps.
Or it snaps. Yeah.
Yeah, and that's so what you've seen now from 2008 is, right, I'm struggling, right? The financial system's struggling. So they pump me with steroids, going to hold a little bit more. Yeah, and then more steroids. Japan, I think, is at 25 doses of steroids. Jeez. Do you know what I mean? The system's breaking, you know?
Yeah.
Japan has 25 versions of QE, and the system's breaking. And what I'm trying to say is, before it's too late, I'm not trying to. A lot of people will go on and say it's the end of the world and it's doom and gloom.
Yeah. I
want to create viable solutions. I want to get people to, first of all, understand the system, and then try and create viable solutions. Now, I know I'm nowhere near like Jeff. I can't remember his name. Yeah, Jeff Snyder. I'm nowhere near like Jeff. You know, I'm Jeff's pupil, Mino. You know, I'm like Socrates.
Yeah.
Socrates, slave boy, and Jeff is Socrates, and I'm the slave boy. I'm not saying I know everything, but I literally want to, like I did, try to understand it. So I have two philosophies. First one's Aristotle's theory of deduction. So if you have two premises, you can make a solid conclusion, and then Descartes, where everything's subject to doubt. So if you can do that, and you can think, so people think that economics and social science, that they're the most complex and subjects in the world, and they're really not. Just literally think, do your own deduction, think, what would I do in this situation? And you're not too far from the truth.
Okay, before I let you leave, your paper suggests that blockchain technology could address some weaknesses in the Eurodollar system. How realistic is this given the challenges of liquidity and regulation?
Okay, so when Bretton Woods was created, just after Bretton Woods, so between 1948...
What does Bretton Woods mean for people, like, let's financial layman?
So after the Great Depression, the financial system collapsed. It basically led to the social fabric that led to the Second World War.
Yeah.
You had jar marches in England. That was a march from Castle to London. You had Hooverville, so you had the camps in Phoenix Park Central Park that were called Hooverville. You had the rise of the Nazi Party. You had the rise of fascism in Italy. You had all this social upheaval, and then they had to fix
almost like we have now. Funny how that works.
what we have now. And that's kind of what I'm looking for. I'm looking for a Bretton Woods that's something that, and again, we think that these people are all evil and they're just like Einstein and gremlins, and they just want to control this. And at times it does feel like we're living in a matrix, and we probably are in a way, but like, again, it's about having these discussions, about being open-minded and
seeing those patterns play out again. Yeah.
And so you've
back to blockchain.
John Maynard Keynes. Yeah. So John Maynard Keynes, he said that he basically wanted to create a central clearing system. Now, John Maynard Keynes would be the ultimate centralism or central planner. So everything has to be central control. But his overarching idea where there has to be a central authority. There does have to be central overwatch. There has to be a gatekeeper. I think there does have to be a gatekeeper. So that concept of a central clearing system needs to be a fundamental part of it. Truffin said that no single currency should be the base of a global monetary system. I completely agree with that. So basically, what I want to use is the fundamental tools that was laid down in the original Bitcoin white paper, because basically all we have at the minute, as when you said to me, what does the Eurodollar system, what's it backed by? It's backed by a bank balance sheet, which is basically a ledger. So blockchain technology is basically a distributed ledger system. It can be central, it can be decentral, it can be controlled, you can change the protocols. So what I'm looking for is a clear, immutable, transparent ledger system. Okay. Right? The collateral, rather than backed by one country's currency, or even like the BRICS is doing, a basket, a bunch of currencies, because we've seen in the that doesn't really work, because you could have one economy thriving and one economy struggling, and you're trying to balance and it doesn't really balance. I don't think it'll work. Okay. Gold won't work, because the reason why gold won't work is because transportation and security costs, storage costs, that you have to leave it up to a custodian. If you have to leave it up to a custodian, it can be manipulated. So you have two choices. Either it's backed by something like Bitcoin, or what I would prefer is it's actually backed by the assets themselves. Okay. I also, that the banks themselves are trading in this off-door system, that they should be complete private identities. They should be separate identities from the banks that operate, the banks that operate consumer banks. Okay. So see the way whenever the BC should be completely separate from.
I follow you.
From their national, what they do on a national level. The global system, what they do on a global level, should be completely separate when it comes to counterparty risk. There should be no counterparty risk. So they're not. So if the Eurodollar system collapses, that's their fault. They're counterparty to that. They're the consumers at home, where we deposit our funds, where we deposit our wages, where businesses have to hold their capital reserves in. That should be completely separate.
Yeah, that's not affected.
The money markets of the Eurodollar system, because they're the ones that's taking the risk, and they're the ones should be accountable to that risk.
Interesting times.
This, most importantly, should be completely transparent on a digital blockchain ledger.
Daniel, thank you so much for joining me today. Fascinating. As I said, we'll link your paper in the comments as well. People can go and read it and research, make up your own mind, arm yourself with knowledge. Again, not saying it's going to happen, but there are the signs are there. So if the people want to go and connect with you, where can they do that? Where's the best place to go and connect with you?
Yeah, probably LinkedIn. If you contact me on LinkedIn, I will. I normally respond to most messages. I'm very open-minded. I like having debates with people. I actually don't mind if you have contrary views to me. I bring them on because it improves my shared knowledge, my shared understanding of what I think is right or wrong. If you podcast yourself and you feel that my content would add value to your content, again, get in contact with me and yeah, I love this stuff, to be honest.
That is what it's all about, and we'll put the link in the comment. Thank you so much for reading me today. And to our listeners, peace, love, and prosperity. And to the next one. Cheers.
Filled with dreams in his eyes, a map in hand, a blue sky, chasing whispers of treasure untold, a chest full of riches, pure gold. Through storms and waves, he stayed true, believing the legends, the stories he knew. But when he found that hidden bay, something strange stood in his way. Pirates with scars, ghosts in the night, believing the legends, the stories he knew. But when he found that hidden bay, something strange stood in his way. Pirates with scars, ghosts in the night, shadows creeping, something ain't right. The chest was there, the key in his hand, but what he uncovered wasn't gold or land. Gold was dust, the dreams were lies. Now he's trapped under stormy skies. Pirates laugh, the ghosts they moan. He's gotta fight, he's all alone. He came for gold, now it's a fight for his life. Gotta find a way out through the strife. Skeletons walk with a chilling grin, echoes of battles, the chaos within. The island's alive, twisting the truth, what's left of the boy and his innocent youth. The pirates say, you're never gonna leave, but he won't give in, he won't believe. He grips his sword with fire in his eyes, he's not ready yet for goodbyes. Pirates with swords, ghosts by the sea, but he's got courage, he's breaking free. The island howls, but he won't fall. He's learned the treasure isn't worth it all. The gold was dust, the dreams were lies. Now he's trapped under stormy skies. Pirates laugh, the ghosts they moan. He's gotta fight, he's all alone. He came for gold, now it's a fight for his life. Gotta find a way out through the strife. He thought the gold was what he'd need, but now he fights just to be free. The island howled like a without a fight, but he's breaking through the darkest night. The gold was dust, the dreams were lies, but now he's soaring through the skies. Pirates fall, the ghosts are gone. He's the boy who carried on. He came for gold, but found his might. He's leaving the island into the light. Sailing away, no gold in hand, but he's richer now, he understands. The treasure was never in the chest, it was the fight that made him the best. He came for gold, now it's a fight for his life. Gotta find a way out through the strife. He thought was dust, the dreams were lies, but now he fights just to be free. The island howled like the without a fall. He's learned that treasure isn't worth it at all. He came for gold, but found his might. He's leaving the island into the light. He thought the gold was what he needed. You know, the golden hand.